rental properties as well.
Yep. Vacancy rates are now at 0.8%. Everyone thought, again, it's like people are looking for an excuse why the market is going to come off. The first was COVID. Once JobKeeper and JobSeeker comes off, there's going to be, everyone's going to lose their job. Data's just come out yesterday. Unemployment's dropped now in Perth from 5.5% to 4.8%. The next was the regulation around rentals come the March, end of March. There's going to be all this stock come on the market because of the rentals. That hasn't happened. So, we don't want to find excuses why the market is going to come off, because we've been waiting 13 years in Perth for this, right? So I think people, once you're in the market, you can enjoy it, but it's, I think it's here to stay for a longer term, and we're certainly buying here with a longer term vision, not just for a quick 12-month uptick in the market, and interest rates will play a part in that.
Okay.
So that's a point. So I've had a few clients that think it's a great time right now to sell their property, but and they're almost rushing to put their properties on the market. But you think in Perth there's no real rush. That think properties are going to keep going up in value.
Well, yeah, we're advising our client we're not selling anything that we've purchased. Obviously, there's always exceptions, because if you're going to make that upgraded property now, that 1.5 to 1.7 property, maybe 2.5, and 2.5 in 3-5 years time. So that's the exception. If you need to potentially sell something to upgrade, it's a really good time to be upgrading. And I'm doing that personally because I don't. I'm looking at the property now. It's 1.7, and I'm like, well, the way it's going, if I wait another 3 or 4 years when I'm ready for that family home, it may be a 2.3, maybe a 2.5.
Yeah, because I'm feeling exactly the same, and I remember talking to Rowan about that, because pre-Christmas we were looking at upgrading to the family home, even though we don't need it right now, and the places in the areas we were sort of looking at, we'd be able to get what we wanted for roughly $1 million. And now when I'm looking, absolutely not. It's minimum 1.2, 1.3 for the same areas, same style of house. So it's a tricky one, because it's like, well, do we spend that bit extra now, or do we wait until we actually need it? But as you're saying, if we wait another 3 years,
it's just going to continue, unless your wage grade's going to catch up with that. And that's the challenge, right? And on contrast, if you're selling or downsize, it may not be the time, because time in the market at the moment, you wait 12 months, you're going to get that uplift. So it does make it tough. You have to make some pretty tough decisions when you may not be ready to.
Do you think it'd be good then, so if a lot of our clients are looking to upgrade, that it's a good time to keep their current home and rent it out, because there's such a shortage of rentals, so they're going to get a really good return?
If they've got the ability to do that. And it doesn't necessarily need to be for a long time. Like, we're going to hold this property forever, but if they can service it, hold on for another 12 months, you're going to get the uplift, then hold on for another 12 months. And we do these updates quite regularly, and for us, we'll share the property clock on this video. It's, again, very early days in the cycle, and like I said, nationally everywhere it's going through a price growth. That's inevitable where interest rates are. If you look at the affordability index, nationally, capital cities, Sydney, Melbourne, are anywhere from 30-40%. Perth sitting at 21%. So the average wage consumed by the average mortgage at the moment is 21%.
Wow, that's a huge difference.
Yeah, Sydney in 2016-17 got as high as sort of 56 to 58%. And 58% of your average wage is going to your mortgage. Clearly, it's unaffordable for Perth. We haven't been this cheap since the 90s. So from a point of where we can get to, we've been to 55, 56% back in 2006. So we're very much at our floor value in terms of affordability. So when we're seeing these auctions run from, there's one in Marmy and Cottesloe that we will quote at 2 million, went to auction, went to 2.2, 2.3, 2.4, 2.5, 2.6, 2.7. Everyone's walked away going, how is that possible? In reality, it's still quite cheap in comparison to the average, to the metrics, which looks at interest rates, incomes, which have improved over the last 10 years, interest rates are down, and median house prices are still, most suburbs haven't hit their peaks. So from that point of view, there's a lot of data that suggests that, again, we're still early days.
And it's just that snowball effect, isn't it? Because you have one house sell on the street for 200 grand more than the next door neighbour knows that they can get even more for theirs, and it's just going to keep going. So it's interesting you say that it's a bit of a cycle, and Perth's kind of at the start of a 5, 6, 7 year cycle. Are you saying that the eastern states are coming off the back of
They've got, So, and they corrected, there's no doubt. So Melbourne and Sydney have come off quite significantly from their previous peaks. But now interest rates have shifted. Understand Melbourne couldn't have home opens for about 4 to 6 months. A lot of pent up demand, and we're seeing that in the markets now, and seeing Sydney again break records. But it gets to a point, it gets to a ceiling from an affordability point of view. And we know where it's been and where it can get to. But in terms of that capacity, it's, if you look at a clock, they're closer to 10:30 on the property clock from an affordability point of view, they've got, I suppose, less legs in terms of where they can get to. Perth's complete opposite, 13 years of stagnation, no growth in that, we come off a very low base. So Sydney will, inevitably Melbourne will go through a growth period, but it might be reflective of 20 to 25%. Where Perth, the forecast that we're seeing from the data is going to be substantially more than that.
Okay, so if you're in Sydney or in Melbourne or the other states, Perth's looking pretty good from an investment point of view.
Absolutely, yeah. And yields, I suppose, have been probably the most problematic thing.
Yeah.
When looking at Perth rentals in the past, yields have been around 3.5%. Sydney, Melbourne people are still buying assets over there on high 2s, early 3s, so it was a hard equation to meet. But now rentals, where they've got to, we're buying things in 3.5 to 4. We had one more recently in the city, Man Hawthorn property, a rental return yielding 4.5%.
And then the rates are sub 2.
Yeah.
So that's becoming really favourable for investors. So that now is starting to put Perth on the map from an investment point of view, which previously probably hasn't because of that serviceability problem.